Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with the whole gang. Tom and Francis, how are you guys doing this week?
Doing very, very well. It's been a very busy week. I'm not sure if that's just because I've been taking care of the editorial inbox this week, but it feels like we've had a lot of news to go through. So much good news coming in that we've had a lot to pick from. So yeah, it's always nice to be busy. And yeah, I feel like we've had a very strong week so far. And yeah, we've been keeping ourselves busy all the week long. And it means that we've got some really cool stuff to talk about today as well.
Awesome stuff. Absolutely love to hear it. And Francis, how have you been?
Yeah, I've been very, very good. I mean, in my opinion, I feel like it feels we've had so much work because of the heat. It's just been absolutely insane this past week. And I don't think it was this bad last Friday, but yeah, just throughout the entire week, it's just been so hot. So I feel like that's probably made it feel like we've had a lot of work as well. But no, it has been a very busy week, a very good week. But yeah, how are you, Polly?
I am wonderful. Thank you for asking. Like you say, it's been very hot, and as we are British, we simply cannot not comment about how hot it is. So, but yeah, other than that, all fine and dandy. So, ready for another great episode of talking about some fintech. What are you guys talking about this week? Francis, what are you talking about?
So the article I want to talk about today comes from Bitget and its latest partnership to improve blockchain literacy among young people.
Awesome stuff. And Tom, how about you?
I'm looking at new Mastercard research into Generation Alpha's relationship with money across Asia Pacific.
Fantastic. And I am going to be talking about new research from Project Nemo about how adults with learning disabilities are being let down by their banks. So Tom, why don't we kick off with you? You can go first this week.
Sure thing. So yeah, basically, I'm looking at this Mastercard research, which is looking into specifically Gen Alpha, who are the kids born from 2010 onwards, basically. And these kids basically appear to be flipping the idea of parents introducing their children to financial concepts on its head, as this new research has revealed that 47% of APAC Gen Alpha parents have been shown new digital financial tools by their children. So just to go through some of the statistics, 53% of parents also said that they thought their children knew more about new payment methods than they did, and specifically found that 63% of parents believe their kids are more financially savvy than they were at the same age. And children in the region have become so accustomed to these new digital money services that 72% of parents anticipate that this new generation are never going to own a physical wallet or carry cash. They just don't see any reason why they would be enticed by cash or anything sort of physical in terms of payments. And Mastercard's research also found further reasoning behind this, revealing that 94% of Gen Alpha children in the region already have access to a financial account, while 58% have already got digital wallets, which is kind of amazing to think when you think that the oldest people in that generation are now only just 15. And, you know, over half of this generation already have access to digital wallets, which is kind of crazy to see. And with so many changes obviously taking place in the financial sector, 60% of parents in the region said that they are just now unsure if their financial knowledge even applies to their children's generation anymore, which left 82% wishing there were more tools to teach their kids about finance. And one of the things that caught my eye in this article was a comment from Sandeep Malhotra, the Executive Vice President of Core Payments in Asia Pacific for Mastercard, which came along the research. And I think it's definitely an interesting comment. I think you'll see why when I read it. But basically, he says that to truly connect with Gen Alpha and their parents, the payment sector needs to speak their language. These kids aren't here to play. They're here to slay, save, and spend smart. They're low-key money bosses, tapping phones before they can tie shoes and turning budget apps into their playground. Cash, not their go-to. Today, it's all tap and go. And aside from the fact that this kind of sounded to me a little bit like an uncle trying to get down with the kids, I think it drives home a good point because I think it shows that the generation have very different demands to any of the other ones before, and they are going to require a very different approach when it comes to payments. And it reminded me, this whole research really reminded me of the conversation we had, Polly, I think, was it like 2 or 3 weeks ago, we were prophesizing that the eventually physical payments are going to make a comeback and be cool again. So I kind of wanted to get your take on firstly the research, but also, do you think this is quite kind of accurate in terms of what this research is suggesting, that we're never going to see physical payments in this region? Or, do you think we were right a few weeks ago when we said eventually physical payments are going to make a comeback? What do you think?
Yeah, when I read this article, immediately I was thinking back to our conversation that we had about digital payments, and I think it's really interesting because I don't, obviously this isn't necessarily wrong, and I think, obviously if the research has shown people don't think that they're going to have physical experiences, then, okay, fair enough. But I really do think back to what we were saying the other week and how it's going to all come back round, I'm sure of it. And I was reading some research. I think I spoke about this back with our original discussion, but I was reading some research, not about fintech, but just digital life in general. And to paraphrase, basically it was saying how like Gen Z and Gen Alpha are going back to physical experiences. Like they want the physicality of it because they've grown up in this like digital era. They're getting kind of not bored with it, for want of a better word, but they just want to get back into that physical, and they value that physical more. So I really think that's going to apply here, and especially when it comes to the things like digital wallets, and especially when, the news is just full of different like cyber attacks on people, like with the M&S one the most recently, or was Tesco and all those other shops earlier on this year that couldn't take digital payments because they had a major outage, and so they could only take cash. And I think we're hearing more and more of that every single day. So I really think there is going to start coming sort of almost full circle. Everything is circular, right? Everything goes in a cycle. Like it always comes back around. And I think we're going to see that with physical payments. And I do think, as much as I love the quote you read out, and that is brilliant, but I think you're so right. It sounds like he's like really trying to be down with the kids, like, hello fellow children, have you guys seen that meme? And while I think that's great, and I agree with the point of you've got to speak to children how they speak and how they want to be spoken to, but I do think that there is an element of that is how you make things uncool. There is nothing more uncool than like a 40-year-old person going up to a teenager and being like, slay, yes queen. Like it's not necessarily how you do things, and I think that might even be a disadvantage, and that might actually help push people away from digital payments, because if suddenly everyone's talking all like slay and all that, I think that's going to make it uncool and push people away. I don't know, maybe that's a bit unfair and a bit mean, but I think that could be true. And I think it's just, you kind of just have to, I agree, you have to meet people where they are, but you have to do it in a way that feels authentic and feels genuine and feels like something they'd actually want to be involved in. So like talking to them how they want to be talked to, yeah, absolutely. But I think you've got to go further than that and actually, okay, how do we teach these kids how to manage money? Oh, they like TikTok. Okay, let's do TikTok, but get like a young person to do it. Don't like try and get some old guy who's the head of finance at some company or something like that. You know what I mean? So yeah, it's interesting, and I think, it's all some really good points, but I still think that we're going to see physical's going to make a comeback, and I don't see that changing personally, but I'm happy to be proved wrong.
No, I think I completely agree, and I like the point you made about just you need to be careful when you're, they want to meet the new hip kids at their level, but they need to be careful because, like you said, it can come across the opposite way and actually turn people away from it and go, okay, these guys don't know what they're talking about. They don't know what we want. They're trying too hard to be cool, and it's coming across uncool. And I guess there's nothing more uncool than an uncle sometimes, and it's very interesting research actually, because I think it goes very much into things are going fully digital, but I think a lot of the times you really can't predict when things are going to make a comeback and why things make a comeback, and often times, I think in Europe we're definitely seeing an acceptance. Oh, physical isn't necessarily going away anywhere. It's maybe being used less, but we actually might see uptake of that sort of physical experiences again in the future as it becomes more of a cool thing. It becomes something that they're willing to try out, and they actually begin to like more than some of the digital experiences that they're being given. And I think it's really interesting to see just the different trends and how different research can see it playing out. But Francis, I want to get your take on this as well, because obviously you weren't here when we were talking about physical making a comeback, and wanted to see if you agree, or what do you think about this research?
A bunch of different things, to be fair, but just talking about regional differences, I suppose, and how you're saying that in Europe it seems like cash is probably going to stay. In the article, it says that 24% of people in Europe are using sort of these new innovative payment methods, whereas 53%, are using them in the APAC region. And I think there's this sort of divide in sort of attitude, in the sense that people in Europe still have this reliance almost, or this idea that we are going to return to physical, like you guys are saying. But I think it might be a completely different thing in the Asia Pacific region. I think it might be that there is this attitude that, cash and sort of physical payments are a thing of the past. Another thing that I thought was quite interesting was kind of like what Polly was saying, in that, it is all going to come full circle. And I think a big part of that is sort of the rebellion that kids have, right? I think if parents use physical cash, kids go, I want to do something that you don't understand, so I'm going to use digital payments. And it's like that sort of teenage idea of just rebelling. So in that sense, I mean, it might be a long shot, and you guys might completely disagree with me. But I think if there is going to be sort of this cash revival, I think it would probably be the children of Gen Alpha that revert to it. I don't think it will be that generation. But I mean, again, that might be a bit of a long shot. I don't know with that one. But the funniest finding from the article, in my opinion, is that 47% of APAC Gen Alpha parents have been shown new digital financial tools by their children. Because growing up, and I'm sure you're both the same, my parents would always ask me, how technology worked. Why isn't the computer starting up right? Or why aren't my emails loading? Oh, it's because you're not connected to the internet. You need to do that to get your emails. But now it's gone even further, and parents are learning about like serious things from their children too, like finances. And keeping in mind, like you said, the oldest a Generation Alpha child can be is 15. I just think it's so funny that there's this serious topic, and it's like somebody who hasn't even taken their GCSEs yet, for example, is saying, well, actually, this is how you can save the most money, or, get the best interest, or whatever it might be. Obviously, that's a UK equivalent, but I just thought it was quite funny. So yeah, a lot of different views from this article.
No, there definitely are, and I think there's I feel like that's something that never changes. Almost whatever's new and like emerging technology, it's always the younger kids who are actually teaching their parents, like, well, look at this new thing that came out. And I think there's very much a generational thing where you kind of get comfortable with what you know, and then you're not really interested in what's new anymore, because what you've got is working for you. And it's the younger kids, the younger generations that actually look at the new stuff and go, oh, this is exciting. This isn't something we've had before, and that's why they're more likely to adopt that. So I think there's a lot of cool things actually from this research. It was quite extensive, so if you want to find out more, you should definitely go and check out the article. But I think that's a good time for us to move on. And why don't you move on to your article, Polly?
Yeah, absolutely. Thank you very much. So, my article, it comes from Project Nemo, the not-for-profit initiative that is driving to improve disability inclusion within fintech and financial services, that we've talked about a few times before on the podcast. So basically, they found that 61% of adults with learning disabilities are saying that banks aren't meeting their needs, and they are being let down by banks and financial institutions. So I thought this was a really important thing to talk about. And I guess this kind of goes slightly in hand with what we were saying literally just now with your article, Tom. But essentially, the whole kind of story is that despite efforts to crack down on financial exclusion and make banking more accessible to the wider population, Project Nemo is spotlighting new research, which has been sponsored by Nationwide, that has found that banks aren't doing enough to meet needs of people with learning disabilities. And as a result, 32% of people with learning difficulties don't even have a bank account in their own name due to the challenges surrounding and creating and opening one. And, a lot of the time, it's a big challenge to manage bank accounts for everyday spending, and 87% of adults with learning disabilities and their support workers or supporters or carers and etc. are turning to informal workarounds. So these workarounds are, family members pretending to be the user while on the phone to the bank, sharing bank card PIN numbers, all things like that, which are, they work, but they are not really a good long-term solution because of the risks that are involved. And a lot of the time, while there is some dedicated fintech support payment solutions, they're not really well known. So I thought this was really interesting because the report and sort of this article that came alongside it was really quite it shone a light on basically how, even though we've had some really great advances in payments and in the digital fintech world, these advancements have actually become more difficult for people with learning difficulties and other disabilities to be able to use, because even though that advancement is there, going down that fully digital path has actually made it really difficult for them to, make and receive payments and, use digital payments in a way that works for them, whereas cash has that physical sense of value and control and is a bit easier to manage. So I thought this was really interesting, and especially when you kind of think about it alongside the lack of bank branches, more are always being closed every day, things like self-service terminals and other ways to make digital payments, and as well as even shopping online. It's all reduced that human interaction and actually brought a lot more challenges in the community to be able to, understand and complete the purchases. And then when you think about all that and then pile on the increased risk of fraud that we suddenly have and all these kind of cyber attacks and other risks, it actually makes managing money a lot riskier for this community. Whereas for, other people, it's making life a lot easier. So I thought that was just a really interesting thing that I wanted to speak to you guys about today, and kind of understanding this divide, I guess, between those with learning difficulties or some sort of disability versus, the people without them, and how advancements in digital payments actually can have a negative effect as well. I just thought that was such an interesting thing, and I think it's really frustrating, I'm sure, for the people within these communities and the people that care for people within these communities about how they're almost being overlooked yet again. No one's really thinking about how these advancements are, affecting them. No one's thinking about the wider accessibility of these things. And I think, there's just a big call for UK banks to use these insights and reevaluate the solutions that they're offering and make finance just more accessible for everyone. But I want to get your guys' thoughts on this. What did you think about, I guess, the research in general? And, where do you think banks can be sort of picking up the slack on this? Francis, I'll ask you.
The thing that stood out to me, I think, is the sort of the challenges that have emerged from these workarounds that the article discusses, to the informal workarounds to manage bank accounts. As you sort of mentioned, family members dealing with finances for somebody with disabilities, I think it's tough, because I imagine in most cases, family members do mean well when they're trying to organize someone else's finances. They're not doing it maliciously, I don't think. They're not trying to exploit the system. Maybe 1 time out of 10 that is the case, because unfortunately you do get people like that. But 9 times out of 10, they genuinely want to help. But I think it's easy to forget that not even giving someone the chance to sort out their own finances can be, above all else, sort of simply frustrating to the account owner. And as the world becomes more digitally savvy, I think that is a good thing, because, that we are sort of developing these new technologies that are incredibly helpful. But the article does a really good job of, like you said, reminding everyone that accessibility needs to be sort of front of mind. And cash was very easily understood and accessible. Again, like you said, cash is, what the value of it is. You're physically holding value and exchanging that value for something else. So now digital money needs to be the same. And I think the recommendations in the article are really, really helpful. And hopefully we'll see a lot of banks and financial institutions act on these recommendations.
Yeah, absolutely. And I think you're 100% right. The people who are supporting the people that have learning difficulties that find it challenging, they're not doing it maliciously at all. Again, like you say, there's going to be the odd one or two, but it's purely from a place of helping and trying to just work it around. And I think one of the things in the article as well, said by Chris Foster, who is the co-founder of Project Nemo and a really great guy, I know him really well, and he says often that people speak for us. He has a learning disability himself, and is always saying how too often people speak for us, about us, or in front of us, and it's never our voice. And I think what you were just saying there really kind of ties into that, and like, let people speak for themselves and let people do things for themselves and let them tell you what support they need. And I think that's kind of one of the key issues here, is that banks and other financial institutions are kind of just doing what they think is right without bringing in that extra voice, bringing in that extra opinion about accessibility and other things. So yeah, that's really interesting. I mean, and Tom, what do you think about it all?
No, I really just want to kind of mirror the points that you've already made, to be honest. I think obviously it's a really good report to highlight the challenges that still exist. And I think it's very easy to forget that as we kind of have this evolution of finance in the UK and beyond, it's very easy to think, oh, more digital experience. They sometimes are more accessible. They can, introduce new functionality that we weren't able to before. And you can forget, although we have had quite a lot of conversations before about losing, say, physical branches because of it, and the challenges that implements for people. I think it's very easy to almost move on from those kind of conversations and forget that people are struggling because of these closures, and because the digital services that are being offered aren't as accessible as possible. And I think, first of all, the report does a great job of highlighting the different changes, just simplifying the explanations for how different features work, including actual visual examples as well, could be hugely helpful to not just the 1.5 million people with learning disabilities, but even wider groups beyond that. And I think that's something that the report does really well to highlight. So yeah, I think it's a really, really important report to look at, and I'd urge anyone to listening to take a look into it and see what it's all about. But yeah, I think there's obviously a lot more that can be done, and all we can hope is that people do actually, specifically fintechs and banks, really do take these recommendations into account, because as we've said many times before, increasing accessibility is kind of a win-win for both. It increases their customer base. It makes it easier for their customers to live freer financial lives. And I think there's so much good that comes from it, and not really any drawbacks from increasing accessibility. A lot of the recommendations aren't things that are going to take huge overhauls. They're not asking these banks to overhaul their entire digital services. It's very simple, just additional explanations, adding small features, make it a little bit more customizable, to fit to each user. But again, these are things that are going to be helpful even beyond these kind of groups that need these accessibility changes now. So yeah, I think it's all positive, and I think all you can hope is that they heed these kind of warnings, because, as I said, they're a win-win. And I think there's a lot of value to be taken from it.
Yeah, 100%. I think, I completely agree with everything you were saying. And it's great that Project Nemo are out there doing things like this to really highlight the issues and the challenges that they face. And yeah, hopefully we'll get to a point where, it's all brilliant for everyone, and no one has to worry about these kind of things. So, but anyway, why don't we move on, Francis, to your article?
Yeah, absolutely. So on the topic of accessibility, there is a link to my article, because my article today is all about the latest collaboration between the crypto exchange and Web3 company Bitget and UNICEF Luxembourg, which has seen the former become a part of the Game Changers Coalition. So through the new partnership, which has initially been signed for 3 years, Bitget Academy, the educational arm of Bitget, will help develop UNICEF's first interactive online and in-person blockchain training module based on video game creation skills development for teachers and young people. So the impact should reach around 300,000 people, specifically adolescent girls, parents, mentors, and teachers across 8 regions: Armenia, Brazil, Cambodia, India, Kazakhstan, Malaysia, Morocco, and South Africa. So in a move to extend the ecosystem's reach, Bitget will also aim to introduce UNICEF to leading blockchain protocols and developers from across the Web3 landscape to participate in the educational initiative. These contributors could serve as mentors and partners, offering diverse perspectives and possibilities for blockchain technologies. So every year, adolescent girls and young women in low and middle income countries miss out on a $15 billion economic opportunity due to a gap in internet access, and digital skills relative to their male peers. So with 90% of jobs today requiring digital competencies, the Game Changers Coalition responds to the urgency of closing the gender digital skills gap. So with the help of Bitget Academy and support from the $10 million initiative Blockchain for Her, Bitget plans to embrace digital literacy and financial independence among women taught to them at their young age. So Bitget's Blockchain for Her initiative has previously supported women through mentorship programs, funding opportunities, and educational resources. So I wanted to talk about this article today because I wanted to get your sort of guys' views on the partnership. And what do you think about this move from Bitget and how it aims to level the playing field with access to technology? Polly, I'll go to you first.
I really can't think of a negative thing to say at all. I think it's a really great move from Bitget. I think partnering with UNICEF, brilliant, and especially being, this sort of first online and in-person blockchain training from UNICEF. I think that's excellent. And I genuinely can't see any sort of downside to helping people improve and advance their own skills, especially when, in young people who kind of maybe wouldn't necessarily have access to that opportunity otherwise. So I think it is absolutely fantastic. And, with the future being probably very blockchain heavy, I think it's great to start introducing that now. And I think one of the things I really like is the quote in the article from the CEO of Bitget, Gracie Chen, who said, "Emerging technologies should not be reserved from the privileged few. They must be introduced early and equitably." And I think that's absolutely right. And I think this is a really great move from Bitget to be able to kind of help boost that. And I guess, they're even sort of helping to boost their own, talent pool in a certain way. The girls that go through this training program maybe one day will work at Bitget. That's not outside the realms of possibility. So anything that helps boost people's skills, great. Anything that specifically helps to, close the gender skills gap, even better. I genuinely have nothing to say other than I think it's brilliant. I love it. And I'm really glad that people are out there empowering young people with sort of the skills and the knowledge that they need to be able to make their own future better. And not just their own future, but everyone's future, when we've got people who are highly skilled in the technology that is going to be molding where we go as a society. Not to sound dramatic, but it is kind of true. I think it's brilliant. So yeah, I have nothing to say about it other than love it.
I think that's the really important point, is that the impact that blockchain will have in the future. I mean, it's still so early in its sort of rollout and development, and I think just in sort of the next decade, probably even sooner to be fair, it is going to be so integral in different aspects of not only just the financial world, but in other sectors too. And I think right now it is still sort of seen as this mystery technology, but I think it really will only be a matter of time before, it becomes something that at least people have heard of. They might not necessarily understand it because it isn't, I mean, on the surface, the sort of blockchain, it makes sense. But, when you start to get into the technical part of it, it is a lot more complicated than it might initially seem. But yeah, just I think the idea of trying to get as many young people involved, and especially those people that, young women that wouldn't have this opportunity otherwise, I think it's a really good way of, trying to level the playing field at the very least. And I think it's a really good initiative and a really good move. Tom, what do you think?
Yeah, I agree with both of you saying there isn't really any negatives to initiatives like this. I think one thing I do want to say is I think it's really good to see a sort of company that's seeing success and enjoying quite a lot of growth at the moment in Bitget, and it's still actively trying to engage in these types of initiatives to not only improve as you were saying, the talent pool for the sort of ecosystem that they operate in, but also to really recognize that there's more need for sort of equity in that space, when they've recognized that there's a real gender gap there. And I think when it comes to teaching young people these digital skills, I think there's always a sort of reaction that you're going to look towards the government of these regions to be the first to try and implement that. But I think there is often a real space for these kind of firms that are doing really well to have their own impact. And as you were saying, that these are people that could end up, supporting the ecosystem they work in, working for them directly. There are benefits beyond just, improving the talent pool for the wider industry. And I think it's definitely a case that hopefully we see more. We do see it every now and again, but I think the fact that there's a sort of real talent shortage when it comes to not only just like blockchain technology, but also just like the wider fintech industry, there's talent shortages everywhere you go in the world. And it's a global issue, and yet there's not many big companies that really massively engage in trying to change that and changing that in the right way, which is kind of what this is doing, and reach people at an early age to help them, give these skills early on and give them a platform to build on that will hopefully make them put them in a really good position to change the game, as it were. So yeah, I think it's a really good initiative, and hopefully we see more similar ideas and programs come from other big companies that are doing well, because they, this is the type of thing that we need to keep the industry going and keep it alive.
I think that's a really, really good point, that, a lot of the time we think that the government needs to be the one that sort of dictates the sort of the path of innovation and development of different, parts of the population, and sort of welcome in or usher in a new ideal. But I think, yeah, you're right. As soon as organizations, especially those that are seeing a lot of success, sort of, keep striving to innovate and sort of find new ways to improve the ecosystem, not just for themselves, but just, in general, I think you're absolutely right. That is really where it counts, and hopefully we'll see more organizations follow in a similar path, or on a similar path, I should say.
Awesome stuff. Well, thank you so much, guys, for bringing your articles today and chatting all about fintech. If you want to hear anything more about anything we've talked about today, head on over to thefintechtimes.com, where there are plenty more news and insights over there. And very quickly, we will do What I Learned This Week. So each week, we are learning so much new stuff about the fintech industry that we thought it'd be fun to share that with our listeners. So, Tom, what have you learned this week?
This week, I found that 54% of banks expect to grow over the next 12 months, while 40% of banks in the UK plan to increase capital expenditure over the next year as well, despite these sort of economic headwinds that we're seeing all the time. And I just thought that's some good positive fintech news, and that comes from new data from Lloyds.
Fantastic stuff. And Francis, how about you?
So after much anticipation, Pix Automatico is finally here. So launched on the 16th of June. The new service, rolled out by the Central Bank of Brazil, will enable recurring payments to be made using the very, very popular payment method Pix without the need for credit cards or complex direct debit setups. And it's just going to be it's going to be a huge game changer in how organizations are able to set up recurring payments with consumers and really simplify the whole subscription process. So yeah, very good.
Awesome stuff. And what I learned this week is that the majority of customers still prefer opening bank accounts digitally, but 10% of all recent account openers still prefer to set up their current account in person, which I thought was actually quite a high number considering. But anyway, guys, thank you so much again for joining me. It has been an absolute pleasure to talk about fintech with you, as always. And yeah, have a great week. Enjoy the weather, and I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode, and continue the conversation using hashtag TFT News and Views, and follow us at the Fintech Times.